A stock everyone's talking about is the topic of today's presentation. And we need to qualify that a bit. So we use tools here at Nanalyze to figure out what stocks retail investors are talking about. And one of those tools shows us the popularity of certain topics on YouTube. And you can see here that the stock we're going to talk about today, HIMSS stock, is up there alongside ARM and AMD and NVIDIA for whatever reason. So we've also noticed on Twitter it's being pumped by the sorts of individuals who use the acronym FUD. That stands for fear, uncertainty, and doubt, and it's what idiots use when they don't want people scrutinizing their sacred cow. If you're holding a stock, you should be its biggest critic. So when we look at HIMSS, we'll start out by sort of looking at the history of this type of business. These are classic plays on self-conscious males, or at least that's how the business started out. And prior to proper spam protection, if you can remember back then, the most popular spam emails that you might receive were for Viagra or similar types of erectile dysfunction medications. The old "Are you satisfying her in bed" play. Hair loss, that's also another niche. And the spray and pray approaches to these categories made sense because there were no barriers to entry, and we believe that's still the case today. A company that sprays more than everyone else, ads and emails and banners and everything they can think of, television commercials, with any air of legitimacy is going to clean house, and that's what HIMSS has been doing. Here you can see their homepage. It says, "Feel great through the power of better health," starting there on the left. In first place, erectile dysfunction, then hair loss, and we're moving to anxiety and depression, early climax, skin care. So when you look at the products that they're offering, it's rather interesting. You see Viagra in the center there at a very high price tag, $139 per use. To the right of that, sildenafil, $4 a use, so that's a generic form of Viagra. And then on the left, you see the aptly named hard mints that they launched in Q2 of this year. And we'll look at a second in how they're marketing those. Now, Viagra, this is quite interesting. I pulled this chart up just out of curiosity. When the patent expirations came about, then even well before that, sales of Viagra have been on the decline thanks to generics. Why would you pay that high price when a generic gives you the same effect? So we went to HIMSS and walked through the series of questions. After answering 20 questions, you get to this choice where it says, when do you want to take your medication? You choose daily, and then it opts there, chewable mints versus standard pill. Look how one is exciting and one is bland, and you feel yourself almost drawn to clicking that chewable mint as opposed to having to take a pill. It's certainly more discreet for individuals who are doing that sort of thing. You see the price is more, and that's the case with HIMSS's own branded medications, at least under the ED category, which is what we focused on. Then what they do is they want the last four digits of your social. There's a nice typo there. Maybe they should have somebody go through and look for typos. Then when you're almost done, they say that you can do these subscriptions for a month, every 3 months, every 5 months. They count these as recurring revenues, even though you can cancel anytime. I think that's rather cheeky. So then we can move on to the next page, and that shows us that we can pay $0. So you put in your payment information, you click pay $0 today, and then when the prescription is quote unquote approved by some entity, then they'll charge your credit card. Our impression of the process, it was very streamlined. The company's own mints are an interesting option that's more expensive than the alternatives. You don't need to see a provider face-to-face at all, so no virtual meetings or anything like that. Off-brand medicines that they're selling are quite cheap. Now, first things first, what regulatory risks could arise from selling prescriptions online? That was the first question that we had around this sort of business model. What are the margins like on their branded drugs versus others? And what's the appeal of this business? What's the bigger picture? Are they a telehealth company? Are they an online pharmacy? And I think they're trying to sell investors both. And the first question that we would have is, what do your revenues look like across all your segments? And this was taken from their SPAC deck. So this is a SPAC. That's a strike against them. We've covered, well, now it would be 100 SPACs, and I think we liked 3, and most have just completely collapsed because they weren't vetted by institutional investors, and They sold retail investors a bunch of stories that were overpriced. It was just an absolute mess, something we warned people about quite a few years ago. So looking at this SPAC slide, you can see that on the right, their subscriptions, so 91% of their business, their revenues would be online subscriptions. To the center, online medications, 83%, and revenue by product. So this is very important. There are sexual health products there, over half, and then hair, dermatology, other. Well, we'd like to see those broken out because two of these offerings are very distinctly different from the others, and that's the stigma surrounding asking for sexual health medication for males or for hair products if you're losing your hair, and those are things that a male might feel more comfortable doing anonymously. Now, when we look at the overall business model, telehealth versus prescription farm, well, who exactly are HIMSS disrupting? Is it primary care provider visits, generic medicine producers? What keeps other firms from offering a similar service? The answer is not much at all. When you go to look at what direct competitors they have, just Google ED medicine. You can see here Viagra online. You've got HIMSS, of course, there in second place. Roman is another similar sort of business there at the top. Then you have Zip Health. While I was sitting in front of the television putting together this presentation, I was watching, because that's the way that media works these days. Once you express a particular interest in something, then you get bombarded with ads. And I noticed all of a sudden now I'm getting all kinds of ads about boner medication. So this article here for Healthline, it says, do you need a prescription for Viagra? And it says it's easy to skip an in-person doctor's visit and request a prescription online. So getting ED medicine online isn't something disruptive. It's offered by a lot of firms, and the ones that you should pay close attention to would be companies like Amazon. Here you can see that Amazon's own pharmacy is now available, and it says already sent us a prescription, implying that you send them prescriptions to get filled. But they're also expanding. Here you can see Amazon Clinic in August of this year expands nationwide to provide messaging and video visits for common health conditions. That's a big threat to all telehealth companies, and especially firms that don't have any sort of barriers or moats. Now, HIMSS has been enjoying strong revenue growth. You can see here on the right, that's extremely strong. That's quarterly revenues reported there. Along the top, the monthly online revenue per average subscriber, they can't seem to budge that upwards of $60. But the growth remains strong. They have strong gross margins in the 70s. We'll see how long those last before they start feeling pricing pressures. Not overvalued for sure, based on our simple valuation ratio, but they refer to 90% of their revenues as recurring, and we would question that. Based on the screen we saw before, you don't have a choice but to click monthly or 3-month or something else. So anything you choose is recurring, and that certainly seems like not a fair way to describe recurring revenues. They also have other vague metrics that they provide in an attempt to show that their business has some sort of sustainability over time, when our thoughts are that they're spending 50% of total revenues on sales and marketing. So what happens if this is halved, right? So it's the old idea of paying $1 for 75 cents in revenues. Well, they talk about paybacks and things like that, but how long until their juicy gross margins get compressed? And what does it cost for Amazon to advertise a similar offering? Nothing. What success are they having aside from peddling Viagra and generic Viagra and anything like Cialis? That's about a $2 billion global total addressable market. So we really want to see that they're able to expand into other areas that they claim they're expanding into. Is this an online pharmacy? Is it a telehealth company? Right now, it seems to be more of the former. There's no granularity into what's working or what isn't. Their investor decks are rudimentary at best. This slide was taken from one of them. You see here their plans on expanding into these other areas. Women's health, I'd be curious to see just how much progress they're making there. They don't tell us. Dermatology, mental health. And then at the bottom there you see weight loss is coming soon. And pain management, boy, that's asking for trouble, isn't it? So, they talk about through normalizing and innovating, our platform can unlock solutions for millions of potential customers. Well, people you want to peddle pharmaceuticals to, more or less. They say as much as 90% of applicable population yet to seek treatment in some conditions. We've yet to get them regularly taking pills. There's more money they can be spending on pills. So I'm personally not impressed with this sort of a business. And from a investment perspective, strong revenue growth and margins aren't everything, because selling prescription medicines online isn't anything new. Just because you can get a bunch of celebrities to wave about ED medication on television doesn't mean that you have a sustainable business. Without granularity into revenue segmentation, we won't know what's working and what's not. That's a showstopper for us right there. We need to know how these different segments are performing. This may be a stock everyone's talking about, but not a business we're interested in. So I'm going to put up another video here that you might want to watch. Before you click that, please subscribe to our channel. We don't run ads. We need your help to support our work. Thanks so much for taking the time to watch this today.